What can a Century 21 agent do for you? They open your home, solve your problems and pat your dog. They provide the service of a butler and the savvy of a business tycoon. Century 21 agents. Smarter, bolder, faster.
Welcome back to your Property Empire. I'm Carrington Clark. Joining me tonight on the show is Siobhan Hayden, CEO of the Mortgage and Finance Association. We've just been joined by Charles Tarbey, Chairman and owner of Century 21 Australasia. It's time to talk a little bit differently. Siobhan, I might start with you on this. They've been in the policy arena for a while, reverse mortgages.
Yes.
It's partly because the government is trying to encourage empty nesters to move out of their homes at times, potentially, but also for people to stay sometimes in there, but then to use that money to be invested into businesses. How popular are they becoming, and are they working in the way that people might expect?
Yeah, I think there's a lot of confusion around the notion of a reverse mortgage. I'm definitely not an advocate of forcing someone to use the funds in their property, but I think it's a great vehicle if people are living in their unencumbered property at a retirement age to look at being able to access some of that equity to have a better retirement living, do some repairs and maintenance. So when you go to a retirement income, often to replace your bathroom or get a new car for your retirement age is difficult on a pension. So having that income to do that, I think, is a great option for people, and that's really what it's used for. It has more legislation and accreditation around it than any other home loan as well. I think that's important to note, and it does require independent legal advice if you are seeking out the opportunity to use the equity in your home in a reverse mortgage structure.
And the interest that people earn. So to people who don't know, effectively, if you have a house, as you said, it's unencumbered, you can borrow an amount against that house. Effectively, the bank's getting some form of the equity of the property. What kind of interest are you receiving for that? Is it similar to a term deposit? Is it getting close to what you'd be paying if you were paying back the loan? Or what kind of rate?
It's a good question. To be honest, I don't know the accurate interest, so I wouldn't like to suggest I know that information. Really, I suppose the difference between it is it's a home loan for those that are 60 years young or potentially a bit older, 65 or 70, depending on the lender product, that you don't make any repayments on is probably a good way of looking at it. Obviously, until death or till you leave the property. And not all that property is then taken by that brand or the lender, so often they take back the debt and there still could be some equity left in that property. It does work on the growth of your home, obviously, in the 10 years or 15 years that you may have access to that loan facility.
And do we know what kind of percentage of people are starting to do that?
Really small number of applicants in the market at this point in time, but I do think it'll grow. I mean, we've got that ageing population, as we keep talking about. So, yeah, I think there's an opportunity for people to look at that as an option in their retirement.
Asset rich, cash poor. Charles Tarbey, is it a good idea?
Well, it's really good for people who... There's a lovely saying, somebody who's reading out their will, they might say, being of sound mind, I spent all my money while I was alive. And that's really what it gives people an opportunity to do, because you've got people who have got this equity tied up. Generally, they're not going to go out and get a normal loan because they've got to make repayments. But with this situation, they can get access to not a lot of money, but they can get access to, they can either get it up front or they can get it over a period of time. But the biggest problem with it is that, of course, that the interest is compounded. And so you might borrow $50,000 today, and in 15 years' time, that might be a repayment back of $230,000. So if you look at it from that point of view, or probably less than that, you'll find that if there's not a lot of equity in the property, you're not going to get much money. But they need a significant amount of equity for you to get to probably the maximum of $200,000 of cash out. But it gives you a lifestyle, and that's the difference. That's the difference.
Can be a lifestyle choice. So, Charles, let's have a look at what's been happening in the property market for the week that was.
Well, the auction clearance rates have been really steady again. Certainly people aren't out there saying the market has crashed, as we might have heard before. The clearance rates across the country sat at 72.4%. That's the national average. This time last year it was 76.4%. So there's not a lot of difference. It is lower. Sydney didn't come in the best this week. Actually, it's been coming in behind Melbourne quite a lot. Melbourne was 75% clearance rates, whereas Sydney was 73.3%. But a couple of surprises. Adelaide 72.7, which is fantastic. Canberra 69.6, and Brisbane came in at 58.3. And Brisbane has not really been a very high auction percentage or clearance rate market, and it's been steady for the last few weeks. So I'm pretty impressed with what Queensland's doing overall, Brisbane.
Okay, and how about homes? How many homes are we seeing advertised?
Yeah, you'll see on the chart that's been a real good spike, and the spike is higher than this time last year, which is something we were very, very strongly focused on. New Zealand market has had a good, strong spike there at 4.8% this week over the last week. But the Sydney market came in at the national market in Australia came in at 2.46% higher. And again, if you look at January last year compared to this year, there's more stock coming on the market, and that's what's needed to slow the process down and get a more evenly balanced real estate market.
And how about those rent prices?
Yeah, pretty good. The only two capital cities that had any real gain, though, were Sydney at 0.42% and Tasmania at 0.29%, but overall, since the start of the year, up 1.2%.
Okay, so we are seeing some movement upwards there, and that vacancy rate?
Oh, I'm pretty happy with these two because Sydney came in at 1.87, Melbourne at 3.03. But the one I've always been watching closely is WA, Perth. They came in at 6.21, and that is a really big improvement because it was up over the sevens in vacancy rates.
Right.
So it needed to come back. We needed to see some movement there because it was getting very, very difficult. So it's given us an average there of 3.7% for those three capital cities.
We were having a conversation at the start with Siobhan about this article that came out last week. It caused some reverberations. Obviously, Siobhan has a personal or professional interest in what she calls disparaging.
Since the movie
The Big Short
came
yes,
out?
and the Australian Short. Yeah. But this was a fund manager and an economist touring Western Sydney and saying what they think is the makings of a Ponzi scheme. There were some scary numbers in there for a lot of people, that, suggesting that the loan value to GDP ratio was higher than it was even in, say, Japan before their crash, that they're unsustainable numbers and we could see a 50% dip. Does that have a direct impact then on what we see as far as homes being advertised? Do you think it does have an effect on sentiment?
I would find it very hard to see a certain part of Sydney collapse the entire market. There may be some issues in some of those markets. There has been some irresponsible lending across some of those markets. Some brokers actually have been taken to task and charged for their behaviour. But what happened in the US and what happened in The Big Short in that movie can't be compared to Australia in any way, shape or form. It might have been 30 years ago when you could borrow a deposit to put down on a home. That sort of lending has not existed in this country to any great degree for a very, very long time. And the way in which APRA have been on top of their game in terms, probably a bit too much, in terms of responsible lending. I read that book and I read about a Mexican fruit picker who had a mortgage of $800,000 on two townhouses with an income of $14,000 per annum. That's irresponsible lending. I've never seen signs of that in this country. Well,
one of the anecdotes in this story is about the Uber driver that he describes being in a car, and he's had something like 25 properties or something ridiculous, and had just gone guarantor for a $2.2 million house for his daughter. I mean, obviously these aren't backed up with claims, but is it building? Is this part of the problem that your industry is dealing with, that the reputation, the worry is that there might be people within industry that has been booming, and we know whenever something booms, then you get sharks coming into the market. Is that the concern at this point, that it's been running for so long that there could have been people getting through who have the worst intentions?
I think there's a number of issues at play. So number one, Jonathan Tepper's allegations or suggestion that there would be a property implosion. There is not one property market in Australia. So let's clarify that. There's pockets and there's all different movements, and the one that he highlighted on 60 Minutes was particularly related to a mining town. Everyone knows when you buy in a mining town, it will go up, and once mining's finished, it'll go down. So again, that's reasonable. The relationship structures to lending, a broker is really facilitating the documentation to provide it to a lender for them to assess and approve. So we're not approving funding in any way, shape or form. We're providing a service to help the pain point of getting a mortgage, which everyone knows is very stressful. In the, again, circumstances that we see played out over the last, sort of 5 years, legislation changes, so beneficial ownership laws have come into play under anti-money laundering legislation at the end of last year. We saw a really highlighted case of that with Joe Hockey forcing the sale of a property in the eastern suburbs from an Asian buyer because he bought it under the trust and company ownership structures. Now, this is what could have been playing out years ago when you see highlighted pockets of, a company buying multiple properties in a certain area. Lenders also apply a good sense test to policy. They don't generally allow someone to borrow 10 properties under the one brand in the one suburb. So, again, that was alluded to in the 60 Minutes session, and they threw in a particular brand about that. I don't believe that would be true. So I've yet to see any lender provide funding to anyone saying, oh, happy, let's just build them all in the one street. Oh, another 10 behind that, fantastic. It's too much risk in one catchment. So there's a lot of things that they...
It's incredibly difficult right now.
Yeah.
This is a fascinating conversation. I'm sure it's going to run for a while, but we do have to end this edition of Your Property Empire. I'm Carrington Clark. Thank you for joining us.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.